With Michael Saylor and MSTR buying almost $2 billion of Bitcoin in the last week, the question arises, how did they not move the price? And the answer comes about with OTC, which is over the counter. People always talk about over the counter. They really don't know what that means, and I hope to explain that specifically in this video, and if it affects the price or not, and much, much more. My name is Forrest Hoddle. You can find me on X and Nostr, and I do Bitcoin consults for one-on-one Bitcoin education and help with whatever basics you need to secure your Bitcoin and so on. So an OTC desk is over the counter, which means that it is not through an exchange directly. And people often will go to an OTC desk, not just for Bitcoin or crypto, but for all sorts of different equities and commodities. And the usual reason is because they're purchasing in size and they don't want the slippage and effects of their purchase on an exchange or on the market to affect the purchase price that they buy or the selling price that they sell at. So they sell or buy directly through an OTC desk, and that OTC desk acts like a middleman and a manager to secure certain prices at certain points. The types of people or institutions that end up using OTC desks are institutional investors, hedge funds, large individual investors, high net worth individuals, and pensions. They use them to buy and sell large quantities of assets. There are some knock-on effects of using an OTC desk. One of them is that it doesn't alert the market of a large purchase because the OTC desk is responsible for acquiring that Bitcoin, and they might already have it, or whatever equity or asset they are dealing with. They might already have it, or they transact and acquire it individually, peer-to-peer, or small amounts through the market and through different types of exchanges and different markets. And so it isn't just one big purchase on the open market. It's a bunch of potentially different purchases that end up being one purchase for the buyer through the OTC desk. Again, OTC desks are matchmakers for buyers and sellers. So they kind of act as, again, the middleman, the dealer. And what happens there is they end up earning their commission off of the spread that they charge. So there might be an additional spread that the OTC buyer pays for, but that is worth it for them to not affect the market and not to have the slippage, which might end up actually being more if they push the price up depending on the size of the market that they're buying in. So for Bitcoin, all of the central big exchanges have OTC desks, and that's probably who like Saylor is using. I think Coinbase even has an OTC desk. Even Bitcoin Well, which is a smaller platform. They're not a centralized exchange per se. They're a non-custodial exchange. They have an OTC desk with a requirement of the purchases being more than $50,000 worth. So usually there are some purchase requirements or selling requirements to access the OTC desk because there's additional people involved, and it's a different process than just buying through an exchange. So the question here that a lot of people end up having is, does OTC desk purchases of Bitcoin affect the price or not? So I think one interesting comparison here to make is if you were to do a transaction peer-to-peer with Bitcoin. You're sending some Bitcoin to a friend, and that friend is paying you dollars for the Bitcoin. That doesn't go through an exchange. That doesn't go through a marketplace. That's a peer-to-peer transaction. And when you're sending it to their wallet, it just looks like a wallet-to-wallet transaction on the network. That doesn't change supply and demand dynamics on a marketplace that is trying to figure out the price of what this asset is worth. So it looks very similar to if you were just to consolidate your UTXOs, or if you were sending Bitcoin to yourself. It isn't affecting the price. So if OTC desks have some peer-to-peer transactions or private transactions that they're able to maybe deal with a whale that has a bunch of Bitcoin and they're selling for market price, but it isn't going onto the market, then it has the potential to not affect the price of that asset. Now, in most cases, there might be some private transactions like that an OTC desk is dealing with, but a lot of times they are also just acting as a market maker and a dealer and they're going into exchanges and they're acquiring a certain amount of that Bitcoin. Maybe they have a pool or a mix of some from an exchange, some from private transactions, some that they've bought before, they're kind of reselling. So they are affecting the price. And of course, this is all going to affect supply and demand anyway, because even with a private transaction, there was a willing seller. And if they weren't going to sell through an OTC transaction, they would sell through a marketplace transaction at some point anyway. So it has different effects on the price of Bitcoin. But overall, it basically evens out because there ends up being arbitrage as well. You're not going to pay a lot more for an OTC desk or transaction or a lot less. It's going to be market price, and that's because it is directly tied to the price of the asset. There's no real disconnect from that. You're not going to strike amazing deals. You're just able to, again, get a large transaction that isn't suffering from liquidity issues and isn't pushing the price up as you acquire it in size. So that is the reason you want to use an OTC desk. And yes, they do affect the supply and demand. It's just maybe a little bit separated and eventually affects the supply and demand depending on how many private transactions or peer-to-peer transactions the OTC desk is dealing with. So hopefully that clears some things up. This is a subject that isn't really confusing when you break it down and begin to understand it, but it's one that, of course, a lot of people don't understand because they have no need to understand it. They're not making $50,000 purchases of Bitcoin and above, so they have no direct experience with an OTC desk, and it's sort of this arbitrary idea out there of some. And it's the boogeyman, a boogeyman of price suppression, where there's many out there, many reasons why people think the price isn't going higher. Really, the price isn't going higher because there's more sellers than buyers temporarily in the market. So it's always price is always on the margin of buyers and sellers, demand and supply. If you guys want to get yourself some Bitcoin, again, I mentioned Bitcoin Well in this video, but Bitcoin Well is where I get all of my Bitcoin. You send them money directly. They send you Bitcoin directly. There's no third-party counterparty risk where they're holding your Bitcoin for you. And they give you a little bit of rewards and some free Bitcoin on sign up if you use my link in the description. If you want to preserve your seed phrase for generations to come, I recommend checking out Stampseed and using my code BTC not crypto 15 for 15% off of their titanium seed plate stamping kit. That's about it, everybody. If you have any other questions, feel free to ask them. There's a video popping up here that I highly recommend you watch, and we'll see you on the next episode of Bitcoin Not Crypto.